Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours, and in this case, the whole weekend. Today is Friday, March 3rd, and we are rounding out, not the first full week in March, but the first couple of days in March. Um, Little bullishness out of equities, some bearishness out of crypto, and the dollar is still hovering around the demand zone. So as we mentioned, yesterday, as we were inching towards the demand zone, we mentioned, a good potential opportunity for the dollar to get rejected outside of the demand zone, which is, more or less what happened. So we basically said, yesterday, break above the demand zone. You've got a lot of room to roam from the daily perspective. And as you can see, we're still hovering around the daily estimated 200 moving average, which we mentioned, I want to say on Monday and Tuesday. And of course, the other days of the week. So still hovering around here, potentially a bull flag, especially considering, the volatility and the tight range and the fact that it's just hovering around the estimated 200 moving average. So possible bull flag, but of course, if it does break, if it does close, if it closes below there, it's already going to be down there. So in my opinion, the DXY will probably survive 104.4, which is the low end of this flat candle open by the end of the day. I would be shocked if it dropped that much before, traditional markets close for the weekend in just a couple hours. It's coming up, actually maybe minutes rather than hours at this point, because we're coming at you towards the end of the trading session for the US. So I'd be shocked if it comes down here, but something important to look out for, especially as we move into next week and hear from more Fed speakers and digest current data as we look to the FOMC meeting towards the end of March. What you're going to likely see is this demand zone come into play more. So I have a feeling that we'll at least, put another wick in there or potentially a candle body. But if we, if we end heading down to the 103.7 area, that may give a little bit of, room for risk. So maybe a potential, Monday play. We've seen a lot of Monday selling lately, so we could see something where it pops into the Monday demand zone, gets a lot of bears excited, and then maybe comes back down to tag this area before moving higher or doing something like that. I think that would be a little bit more expected for DXY. But, if we continue to hover around the estimated 200 moving average and continue to try and poke into the demand zone, we could do something like this, which would really hurt the rest of risk. And especially that's definitely a scenario that I would expect to occur, provided we get, another, interest rate hike from FOMC, or a higher interest rate hike, which could be that 50 basis point number that the market's trying to price in right now. There's about a 30% chance of that the market's pricing in. So something to consider just for basic DXY outlook. Obviously, this is really the foundation of the rest of the market, at least in terms of current correlation. So something to watch out for there. This demand zone still going to be in play. I expect it to be a little bit more in play next week, at least in the beginning, and how we open the week. I have a feeling we will not end in that same way. Monday, moving into Friday, we were a little bit bullish, then we sold off Monday, and then DXY had a bunch of volatility in the same range. So I would expect a little bit more of that next week, and then extreme volatility as we head into FOMC. So looking at equities, moral of the story is, this RSI trend break was an absolutely golden trade. So if anyone was, trading TradeFi independent of crypto, this was a fantastic trade. When we called the outlook, we were all the way down here at the bottom, 2.69% move on equities. And of course, if you simply played, the break, then you would have played this candle right here, which was the confirmation candle. And then you would have had, close to 2%. So that was a really good trade there for equities. The interesting thing, that is upsetting is that crypto, looks more like equities before this boost. So that's something to consider. That we discussed this yesterday. I made this point that, equity, that crypto is really just lagging equities right now. So basically, if you look at these formations, it's basically the same formation but crypto seems to almost be a week or several days behind, in the grand scheme of things. So what I'm expecting for Bitcoin, or I mean, what I'm expecting for equities is that this, will probably start to relax a little bit at this current level. So you're starting to reach, the resistance level created on February 10th and on February 17th. So basically, 40.50 is that number. I'll go ahead and draw that line for everybody. So 40.50 is kind of the line in the sand currently. And for equities, if you can get above 40.50, I think you can head higher. You get rejected at 40.50, you're down here, coinciding with 40.10 in the 4-hour estimated 200 moving average. Break below that, and then you are probably, looking for hopefully support catches in this area. Now, the difficult thing about this variance in crypto and equities is that obviously, the hope was that, if equities had a boost, crypto would get a boost. And that is, not the case whatsoever. So that's why I'm talking about this idea that crypto may be several days behind equities. And that's something to take note of, especially and work it into whatever bias that you have for trading. So just based on current crypto outlook and the way that demand is looking right now, the line in the sand is still, 22.4, 22.5. I think, 22.45 is probably the better exact number on your chart, but 22.4 to 22.5 is a very critical level, as it basically dictates the range that we're trading in or lack thereof. So get above 22.5, you're back in this range right here, and you're attacking 23.3 as your next area of resistance, likely also 23 flat, as resistance as well, which is the estimated 200 moving average. So that's your range right here. You've got a range between 22.5 and 23.3. And you've also got a range between 21.3 and 22.5. So if 22.5 fails, then you're likely headed down here. And I think you would probably, we mentioned this before, this whole area would be a good area for longs. And I think, if we start to dip down into this area, whether it's down here or whether it's exactly right here, you'll start to see prices, eventually recover, back to 22.5 or potentially back to 23.3 or higher. So I don't think it is smart. I did tell the TTC community, unless, the signal for crypto longs would be a convincing break of 40.10 for equities, which we did get. But the concerning thing is we've not exactly retested that level yet. So is this, I'm going to go ahead and delete some of these lines, get a better perspective. So now the question begs is that you cleared this kind of fair value gap area, and then you just hit your resistance up here. Now, do you deviate back down here, or do you actually hold the support level? And that's the big question for equities. And I think you'll see some indecision from crypto, at least this weekend, until equities open back up. Because if crypto is delayed on equities, then if equities can hold this level and end up moving higher, then crypto, delayed action will catch up eventually, which is the hope. But if equities just immediately deviate back down, then this was merely maybe a short covering move, and there's no real strength here. And crypto, tries above 22.5, maybe gets rejected at 22.8 or 30 or 23, and then deviates back lower. So that's certainly plausible as well. So you need to wait for these confirmations. That's the tricky part about trading confirmations, and why I try to be careful about exactly how I offer these trade ideas, because what you would really want in terms of a more or less a foolproof trade setup is it breaks above 22.5, it retests 22.5, it holds 22.5, and you long up to 23. Or in this scenario, you short 22.5. And then it breaks down lower, and that's the play you want. So those are the two trades you could take, or you could wait for it to deviate higher, and then you try and short higher with the expectation that it's going to head lower to then catch up to a full equities movement. So that's why I think, especially over the weekend for this type of trading, and I advised the same thing last weekend, is this is not really the best environment. The liquidity is low. Someone clearly took a lot of money off the table yesterday with this extremely ugly candle 5 to 10% moves across the broader crypto sector. And, this is not anything that I want to buy into yet. I'd rather wait for this liquidity at this level to get tagged, because, there's a lot of confluence here with this level in terms of importance of both being resistance and supports. And it's both equal lows as well as previous highs. So that's a really good level, I think. And if we get that by Monday, that'd be a really good long opportunity. Now, if you are, you really think that we are going to go ahead lower over the weekend, which I think is more plausible than not, then you would short here and then try and play that long. Or maybe you're paid, you say, you know what, I have better things to do on a Friday night. I'll set my alerts for maybe 23K and 22.8K. If we make it there, I'll short it, and try to get down to 21.4. Then you can look for longs higher. I think, maybe the best outlook for that entire cycle is Friday flat, maybe Friday, evening, we get a little buy action. Maybe it pushes into Saturday, Sunday, and then on Sunday we start selling off, and then heading into Monday down here, and then Tuesday, Wednesday, Thursday, we're, grinding back up here. So that would be very ideal for Bitcoin. But right now the levels are obvious. Break above 22.5, you're targeting 22.8, 23, 23.3. Stay under 22.5, you're pretty much targeting 21.5 to 21.3. So that's your outlook for Bitcoin. And it's going to be a little bit similar for ETH. And as you can see, ETH even looking weaker than Bitcoin. I'll go ahead and remove these. It's a much uglier 4-hour candle than was on Bitcoin, I'll tell you that. So we've got our market structure here. Got a market structure break. Typically for this type of action, you would at least expect 1600 to get retagged, or maybe 1585 at the low end. But, we did try and tag 1580, several hours ago, and was an abject failure with a nice Darth Maul following. So this does not look very positive to me, from my perspective. So I very much would expect ETH to head down here to that 1530-ish number for potential bounce. But, if Bitcoin is heading down to, 21.3, then it's probably more so you're expecting ETH to head down to 1500 or potentially lower. I'll go ahead and draw this line because I think, this is a good little demand zone area for ETH. So if you are looking for longs, I think you would want to take them right in this area. In a perfect world, this is a fantastic long setup. And then either it gets rejected at 1530 and head, or does something like that, one of those two things. So I think that would be the ideal ETH outlook. Again, I'm not going to chase overzealous shorts over the weekend. I definitely did not get the full breadth of the play yesterday. I probably, I was leaning, more short than not, but I did advise that I was not taking any trades until we hit the extremes. And obviously we did hit an extreme, and I do not like the reaction. So I do not think that longs are in vogue. I do think that if you really wanted to take the risk, you could probably squeeze out a shorts with trying to attack longs and this demand level for ETH. But I have a feeling that, if that scenario plays out for Bitcoin, then what ETH is doing is probably, back up to 85 down here, and then something like that. So that's also something to be careful of is, if Bitcoin does kind of do that little movement and shaking and scare some shorts move, I would expect ETH to do somewhat similar with 1585, potentially as high as 1600 being the target for that. But I think that you'll likely see lower prices by Monday. That's my estimate. So with that being said, if you're not in the Trade the Chain community, that's where all the juicy alpha and information comes every single morning. And of course, we update throughout the afternoon with, of course, everything else that's going on in the market. Feels like there's a million things going on every single minute of every single day. So that's where all the juicy information is. And of course, we will see you on Monday and every day of the week. So have a good one. Good luck trading, and feel free to reach out if you have any questions.